Welcome back, traders and investors. We have Sheldon McIntyre on the line. He is the founder of 360 Virtual Advisor. Sheldon, how you doing this morning?
Doing well, thank you.
Yeah,
Yourself?
good. You sound great, man. You're really close here. It sounds like you're right next to me, like the Brentster. But before we go into all this, the Argentinian debt situation and what's going on in the markets today, you're a frequent participant in our chat room, and you come on our show as well. But could you just tell us why you listen to Benzinga's pre-market prep brought to you by Options House? I mean, what you have a lot of other things that you can watch and listen to. Why do you come and listen to our show?
Uh, because it's really traders for the most part that are guests, number one, actual traders, not ones that, not individuals that tend to philosophize about the markets and offer broad, almost unactionable commentary. And the second reason is because it's pretty succinct and the content's pretty, I would say, raw and actionable. I can actually listen to it in the background while I'm doing my market prep. So I found it actually very useful. I'd not known the show before I came on the first time, and after hearing the show a couple times, I'm like, okay, this is something that I can actually put on in the background, listen to while I am preparing for the trading day. I mean, I know that some of the guests that come on maybe are of the broader theme ilk, and that's good. But you've also had individuals that have talked about high frequency trading and other themes that really I don't know much about, but glad to know more about. So
Okay,
that's why.
thanks for our next promo for the show. Okay, we got a lot going on today in the markets. S&Ps are trading down 14 and a quarter points, reacting to the Argentinian situation. Now, I think that's something we have talked about before. With other guests. I think me and you may have talked about it. I know you're a long-term investor. This is, people are reacting to short-term news here. Does this alter your long-term outlook on the U.S. equities markets?
No, the Argentina thing, no, not really. I don't think it's a surprise at all. So I don't think, the market's being down today. I'm not sure how much of that has to do with this like selective default or whatever the S&P is calling it. I think it has to do with the fact that the markets have not been synchronized for a while, meaning that some indexes have been printing new bull market highs while others have been, stuck in a notable correction. For example, the small caps, micro caps, and even the higher RS name ETFs like a PDP or a DWAS. So I don't see Argentina really as a factor here. I think probably your previous guest had made a couple of good points about Argentina. I surely don't know the detailed machinations about what's taking place, has been taking place there, etc. But living in a country that borders Argentina, I can say that Argentina really has been a basket case for all this this current century. So it's not a surprise at all. In fact, I think the biggest problem for Argentina right now is the brain drain they're experiencing. Chile's been a beneficiary of the number of well-educated individuals that have left the country and currently working in Chile and to a lesser extent in other countries. And they all have the same opinion really as I do, and mine's derived from them, and that's really the country's a basket case. So
Okay,
it's
all right.
really
No surprise to you then, this situation here and a little short-term effect on the U.S. market. So this is nothing that's really it's not
no.
news to you. I mean, being in it right next door, you've been following the situation, so not surprised at all. Just going back to the U.S. markets here, we've had a nice run up and finding some resistance, kind of been in a trading range. Has there been anything in your portfolio that maybe you've hit some price targets or you've moved some sell stops up and they've taken you out? Has there been anything that any sectors or any individual stocks you've been taking some profits in lately?
Um, I have, well, really, the concentration of the current open holdings really is now 80% international and 20% US based. I have Lockheed Martin and APC and Anadarko Petroleum, and those are the two US based equities. Otherwise, I have a euro short on. I'm long Baidu. I'm long China through FXI. I see that the let's say the old industrial China has been outperforming the new. China, so I'm long that, and I'm also long Petrobras as well from earlier prices. And then I've also got a couple of short positions on the housing sector through MTH and USG, and that's basically how I've been positioned. And I've been cutting my losses on positions that have been working at about 2 to 3% right now. So,
What are those positions that you've been trimming a little bit that have been working against you?
let's see here. AVGO was one in the semiconductor space that it took a small loss of 2.69% there.
So
That was, one of them.
do you use percentages for your stop losses, or do you use
Um,
price points?
the initial stop loss is 5%. When I take a trade, it's 5%. Then we'll see how the price action is afterwards in terms of how much it goes up, if it goes up, and then I'll start implementing trailing stops after that.
Okay.
And also, I use moving averages, very short-term moving averages to evaluate, let's say, short-term extension in a breakout, for example. I use if a stock really has a solid move and it's around 19% above its 10-day moving average. I have seen within the context of stocks that I traded, that's a relatively extended percentage above the 10-day, and I will take profits. William O'Neill I think he uses, or has said that he uses about 22%. But for the stocks I trade, I find 19%, for example, above the 10-day is a good place to take profits if you're looking for a short-term gain on there.
So it sounds like I mean, do you look at any, I mean, you're talking about longer term trading and position trading. Do you ever look at anything, shorter than the daily charts? Do you ever use, shorter term charts to, perhaps, tune in on an entry or an exit?
Absolutely. I start out really at a monthly level when I look at a stock. When I run my screens, it's a daily chart. But once I find a daily pattern I like, I flip immediately to the monthly. I look at, because one of the things, particularly in the tech sector, you have to take into consideration is a lot of stocks have come up to or are nearing their 2000 or 1990 highs. So that's a fact you have to take into. Then I flip to the weekly charts. I look for intermediate term extension. How does the weekly chart? How's the volume? And then I move to the daily again, and then I start looking for usually about 90% of the time I look at my 15-minute, 30-minute, 60-minute to get the exact trigger price that I'm looking for.
So nothing shorter term than the 15-minute then, right?
No, 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 no.
Yeah, I know. I've been with traders. And I think I've seen Dennis do this before. 1 minute point and figure charts, and I mean it just like drives me crazy. I mean, you think a stock just moved, like 50, 60 cents, and it hardly moved at all. But okay,
To
that's
each his own, right?
exactly, exactly. Are you doing? Can you give us any take on the crude or the gold market here? You think with these kind of debt worries that it might be a little bit of a boost to gold, but gold's trading down $8. Any take on the gold market?
The gold market has, I think, been frustrating for a lot of people. I haven't really focused on gold so much as the miners. I've traded the miners successfully. For example, this month I closed a trade for a 20% gain in the junior miners, and maybe they're setting up again. But gold itself, to be honest, the chart's starting to look like it might roll over and go down before it goes up here. From what I was looking at last night, in terms of oil, looking at just the spot price here was a chart that I posted last night on Twitter, was that since 2011, every bounce that oil's had from the 200 week has been a smaller gain. So really, like I think I said to you at the last time I was on, we talked about oil. Really, it's been a 200-week moving average story where it falls down, it bounces, and has been a smaller bounce each time, falls back down. So I don't really see a clear defined up or down trend at this point in oil.
Okay. All right. Well, thanks for coming on, Sheldon. Sheldon McIntyre, founder of 360 Virtual Advisor, giving us his long term perspective on the markets, which we need. Sheldon, thanks a lot for coming on. Thanks for popping in the chat room with your comments and questions. They're always a treat. So have a good trading day. We'll speak to you soon.
You bet. Take care.
Okay.